This is Autopilot, passive trading system. We show you how to automate your trades.
Welcome back, traders. This is Sandra with Trading Made Simple.
So now let's talk about momentum and how momentum can show you where price is going. Momentum here, I made mine. You can customize yours. I made mine green down here. It's letting you know that we're oversold, right? We're oversold. This is possibly a buying opportunity. What happened here with price? We broke below the 20. We hit that negative 100 line and we bounced. And as soon as we bounce above that zero line, more people are coming to the concert. So if right when we cross above the momentum of zero, all of a sudden, the restaurant starts getting packed. Why? Because all the machines out there with the institutions identify that we have more momentum in the market. And this is a good time to buy. And then what happens here when that happens? We start going up. Did we have a down day today? This day? Absolutely. Price can never just go straight up. But look at how close it got to the 20 to do a little retest. And then just keeps gliding up. Look at how we tested point of control for this week right here, right? Remember, this indicator is telling you where point of control is. Did we break below point of control? Yes. So on Sunday night, if you would have took your watch list and you would have used this week, because on Sunday night you would have been here, you would have seen the indicator, and you would have said, okay, anything above this is bullish, anything below this is bearish. Are we not now breaking below points of control today? We are. Where could we go, guys? I tell you where we could go, right here. Here's your first support level. And where, if we break below there, where are we going? To the 20. And if we break below there, then we're going down here. So we give you 3 resistance above, 3 support below, so you could visually see and then create a game plan on how you would want to automate SPY. You could have automated SPY Sunday night and said, when it breaks point of control, I'm going to put. That's as simple as it gets. Where's my target? This first green line you're going to use as a trigger to program your trade. We give you the whole program in this sense so that it's very easy for a large audience to start to get comfortable with how price action works. And so it doesn't have to be this complicated thing. You don't have to go to a school for 1 year to learn this like I did. You could literally just use the tools on your chart and learn it literally within a week or two. You'll be putting on your trades and you'll be automating your trades. It's mind blowing. But the fact is that we give you something simple that you can follow to see if it works or not. I don't want you to get into something where you're like, this isn't true. No, that's why we made Autopilot inexpensive, so you could actually see, and by the way, with a 30-day money-back guarantee, to try it and see if you like it. If you don't have any time to work it, I understand. You can get your money back. If you put some effort into this and just automate your trades on the weekend like we tell you to, for calls and puts. Why calls and puts? I get this question all the time. The trend is bullish. Why am I putting on a put trade? Because of today. You could have profited today. Sure, you're going to have some call trades, and maybe you were already triggered in some call trades. And if it didn't hit, as an example, then you would have been at a loss. This actually looks like it hit it. And why do we pad our automations? Because the price will come so close to that little level, and then you turn it, right? So for those moments that you didn't make any money because, let's say, it did do a U-turn, you're all in all calls, you're now not profiting from a put trade that you could have, right? That is the reason why we put calls and puts, because we don't care where the market goes. We're just following the trend. The trend is bullish, there's no doubt, but each and every week, point of control changes. Let me show you. Point of control here, point of control changes. You can almost see where it almost is like forecasting somewhat of, do we look like we're going sideways? Do we look like we're going up? On this week, it looked like we were going to go sideways, but what did price action do? It went up, right? But we already had these levels identified to us on Sunday night. How about this one? Broke above point of control, came down to visit it, back up, hit the first resistance line. The first, oftentimes even in our VIP, we only program, typically speaking, we'll show you how to program for 2 or 3 targets, but really The first target has a higher probability of success than number 2 and number 3. Hey traders, if you're finding this helpful, go ahead and tap that like and subscribe. We drop fresh trading setups and automation tips every day. And trust me, what's coming up next could level up your game. The links to learn more about us and our system is in the description below. And so really, you're looking for that first target. And so here, what are we looking for? That first target, 650, 692. So let's take a look at QQQs. Let's see. I think the Qs actually look very similar. Did SPY break? We're on a day chart. Ooh, look at SPY broke below the 0 line. We got the arrow down. Momentum's heading lower. Could we come and test this first line? Absolutely, as well as the 20. And why would we test that 20? Because that's what price likes to do. It just, once you just try to stop figuring it out and just recognize that's what it does, it helps you. And so what ends up happening is price will always go up and make a higher high, but remember that a trend is about higher highs. In this case, because we're bullish, the trend is typically higher highs and higher lows. What does a higher low mean? Let me visually show you that. So here we have a low, right? We broke below 20 and we have a low. And then the next time that we had a low is over here, but it's still higher than this one. So if we take a look at this high and we take a look at the next high, it's a higher high, and this high, higher high, right? Here then it all of a sudden starts to go sideways and almost doesn't break it, but it does right here. But you could see that we have a low, higher low. That's almost a double bottom. Here's a low. Are we going to be making another low here? If we make a higher low and the trend stays intact, then we shouldn't be breaking this candle right here, should we? See this candle right here? We shouldn't be breaking that candle. This candle low right here, we want to make sure that we don't go below that. If we go below this low, what is that? What's your analysis for that? If I know that a trend is higher highs as well as higher lows, if we break the first low from that trend, could we go down and see another low? Yes, we can. Yes, we can. That's how the drawing works, right? Higher highs, higher lows, but when we break it, now we're starting to downtrend. And what does that mean? It means that it's lower highs and lower lows. Let me see if I can find one back here. We don't have very long lower trends. They say that the market typically, right, keeps moving up. But when the market drops, those drops are fast and furious, but not downtrending. We'd have to go back to even COVID was a V-shaped recovery. Do you remember COVID was a V-shaped recovery? They call it a V-shape because it popped right back up. And then I'm looking to see if we break that low. And boy, if I look at this, guys, this is why I like the 20 so much. You just can't plan for this. If I put my cursor right here, if you could see my little pencil, if I put my cursor right here, right where point of control is, look at how close to the 20 that is. I love the 20 EMA. I just really, this one. I've been using it a really long time. It's just so simple. You don't have to have 5,000 indicators on your chart, just a couple. The reason I like it is because it just seems like all the foundational items that you learn in price action, it just seems like in this example, like I just told you, what context does that bring when you talk about, is this the tool for the job? In any industry, you have tools for your trade. And in trading, EMAs, as well as simple moving averages, they're just moving averages. They help you to identify things, right? And so when I look at this tool, it's a tool for a trader to look at this 20 EMA. It always lines up with other confluences of price action. So just like I told you, if you were to have some formalized training, you would know that this was the last higher low. What are we looking for price to do? We're looking to see if it comes and tests it and then bounces, or if it goes even lower. And you can see visually when I looked at it, it didn't look like Here's the 20 down here. But as you can see, because it's upsloping, when I put my cursor right there, look, it is touching that 20. I just love that supporting evidence. That gives you it gives you confidence to, hey, am I seeing this correctly? Yes, I'm seeing it correctly. That's what all these things do, these pieces. That's what all these things do. So, as we can see right now for SPY, we're just breaking below the 0 line, which means that we are getting a little bearish. And that, by the way, is on a day chart. That's pretty heavy. Because what happens, let's look back, what's the experience of when momentum breaks below that 0 line? What happens in the past? We had a gap down. It only lasted for one day. Remember that elevator down? And then we pop right back up. And so here, this is a great experiment right here, taking a look at right when we popped below that. And look what it did. It touched that negative 100 and popped right back up. And then started the trend to go back up again. And the reason I painted this red is because how long can we stay up here before we come back and revisit? We have to, what is the bell curve for momentum? The bell curve on momentum is that 0 line. So we come back up, we come back down, we come back up, we come back. Doesn't this look like a wave? It's just a wave, ebbs and flows. Ebbing, boom, come back down. Ebbing, come down. That's what the market does. So the more that you understand that, then you won't get locked in the psychology of, okay, I'm ready to trade with my real money now, and the market's I'm just only doing calls because the market only just goes up, right? So if you got prepared, you did your calls and puts like Sandy said, you'd be profiting from today's movement and probably yesterday's movement. If there are support and resistance levels for each time frame, we're trying to analyze, okay, I understand that this is point of control, but as you can see on Monday, we almost hit the first target. So with that in mind, you could say to yourself, I'm going to go ahead and program a trade that says if we break above that first target, I'm in a long call. Why? The reason is because if you break above resistance, then the odds of you hitting the second target are greater.